You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's the end of the week. It's Friday. That means it's time for Volatility Views. My name is Mark Longo from theoptionsinsider.com, as well as a little thing we like to call around here the old OIRN, a.k.a. the Options Insider Radio Network. Coming at you live today, 1 p.m. Central, 2 p.m. Eastern. For some reason, I had noon on my brain all day. That's the old time, of course. We're at 1 p.m. Central now. You can get it live on Mixlr or, of course, on demand at any time. You can listen at 2 in the morning. We won't hold it against you on your podcast provider of choice. Of course, however you listen, make sure you hit us up. Those questions, those comments. We do like to hear from you guys, the Volatility Faithful out there. And speaking of Volatility Faithful, let's see who we've got joining me on the Faithful Volatility panel today. Let's start off. He could be down the street in the World HQ of Option Pit. He could be in the burbs. He could be at a Costco near you. Let's find out. He is the Greasy Meatball, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. Isn't it amazing how much great volatility trading is done in the beans aisle of a Costco?
It is amazing how much you can do when buying a 96-ounce can of tomatoes.
96 ounces. That's small for Costco.
I know.
If it's not 10 pounds.
No, I like to get those big. The funny thing is Costco, if you're making sauce, the only kind of tomatoes you should use are San Marzanos. You know that. And Costco has these giant cans of San Marzano for $3.99, and then you go to the regular grocery store and you see like the little tiny San Marzano can for $4. It's like insane how cheap Costco sells San Marzano
It's like
tomatoes.
They slap you in the face at the regular grocery store.
Exactly. But I'm actually coming to you from the world headquarters. I'm up on the 30th floor at the corner of LaSalle and Adams.
I thought I could see you there. I'll throw a paper airplane out here, and maybe it'll make its way down there to you. And also joining us from a little bit farther away, can't really hit him with a paper airplane. They have to be a mighty one, perhaps with a jet engine, courtesy of our friends at Boeing here across the street. We are joined by good old Matt Ambertson, the founder and principal over there at ORATS, a.k.a. the Options Research and Technology Services, a.k.a. the guy who's bringing you all the sweet earnings data you guys love to crunch during earnings season. Matt, welcome back to the show. You are indeed the inaugural, easy for me to say, holder of the MIAX hot seat on the program today. You're the inaugural guest in that. How does it feel? Is it a little tight? Is it a little squirmy?
It feels great. I'm going to be in Miami next week. Very happy to be on a panel about entrepreneurships. We're all entrepreneurs here. Finally, the industry is recognizing us little guys, Mark.
That's something I've been pushing the industry to do for quite a while. Obviously, I was functional and active with that Options Alliance for a long time, and I've been telling them for years to say, maybe you should cast some insight and some light on other things going on outside of the exchange world. I know it's an exchange conference, but still, there are other things going on in the options world outside of SIBO and ISE and all that other stuff. And it's nice to see that the folks in MIAX are actually doing that. So settle into that hot seat, sir. It's going to get fun. Meanwhile, we're going to keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. And gentlemen, we are in it. We are in the Endgame. It is the Volatility Endgame. Of course, I really just wanted to throw that in there because the big movies come out. You guys have your tickets ready? You going to see Endgame this weekend? Matt, do they have movie theaters in the state of New Hampshire?
They do. My kids are excited for all that stuff. So,
you're not going? You're not going to share the love?
No, I went in Chicago. I went to a movie theater that served beer and food, and ever since then, nothing stands up.
They do. I do like that. If you're going to go to a movie, that's the way to do it, is to have beer and wine and do that during the movie. I agree. Beer,
wine, and maybe a nice 4-pound can of tomatoes. You never know what you're going to need over there. But it is indeed the end game, at least for Vol. Not a lot going on in terms of where things are going. The market kind of trying to find its way. Today we saw some GDP numbers coming out here in the open. GDP was about 3.2%. That beat the economist, easy for me to say, economist estimate. There we go. Say that 5 times fast. You can tell it's the end of the week, listeners. I'm having a hard time saying everything today. The economist estimate of 2.5%. Of course, they call it the dismal science for a reason. Stronger than expected exports actually driving that increase. Of course, all of that not really causing any boost really to the markets there, because we also saw the stocks really kind of kept in check. We saw some bigger names like Exxon, Intel not exactly lighting up the tape, despite the fact that we saw some other names like Amazon and even Ford getting out there and kind of lighting things up this week. So kind of a mixed bag on the earnings front. And some strong economic data, but not enough to really boost the market. It seems like it's in weekend mode already. Dow up slightly, S&P up a little bit more than 0.1%, NASDAQ off slightly. None of them really rock'em, sock'em robots today. VIX Cash has been an interesting beast to watch coming into showtime. It was at 12.75 or so, then down to like 12.5. Now it's back up to about 12.75 or so, up about a half a handle from where it was. Remember, not last week, 2 weeks ago, we had to have a week off. Don't blame us. The market gods forced us. The show was closed. The markets were closed, listeners. And Spikes has been hanging. It's been interesting to watch. Spikes has actually been a little bit more disassociated from VIX Cash than I've seen it in a while. It's actually close to a handle away now. It's about 13.25. So it was for a while there, about half, 3/4 of a point, a little bit tighter now. Looks like about half a point away now. But still, interesting stuff. A little bit of a distance there between Spikes and good old VIX Cash. Of course, our old friend VVIX. Still hovering in the, I suppose you can, I don't know what you can really call this range, because it's not quite in the 70s, which we know is where things get rocking and rolling. Not quite in the 90s, but it's in the low 80s. It's in about a little bit shy of 84, about 83 and change. So that means it's flirting with that 70-odd handle, even if it hasn't broken through it yet. So maybe it's poised to make a move. Maybe it's got a little bit more retracement to go before it's ready to pop. Either way, maybe something afoot in the coming weeks for VVIX. Matt, you're our guest, so we'll kick things off. We'll get to all the earnings stuff in a minute, because I know it's kind of hard to talk volatility right now, especially this week, without talking about earnings. But before we get to that, what's catching your eye in the broad volatility space this week, sir?
Yeah, as you know, Mark, we look at some indicators as far as volatility and predicting what the market might be like coming up. Those are all very benign, and they have been for some time. We got a little blip a few weeks ago, and we sent out some automated warnings to people, but it's been really, really benign. Our contango measurement is still in contango solidly, and it looks like the upcoming weeks at least are going to be, somewhat of a snore. So, there's been some interesting earnings stuff that we'll get to, but as far as the overall market, I want to hear what Mark has to say. That's what I'm watching mostly.
Mr. Meatball, it has been a little bit quiet. VIX Cash and spikes have kind of been languishing in this range in the 12 handle to 13 handle for the better part of the last few weeks. There have been a few blips, outside of that pretty much, but not a lot really. Of course, we had the holiday last week, so that truncated things. So I'll allow you, Mr. Meatball, if you are so inclined, to even go back to encompass the last 2 weeks. What's been catching your eye in the volatility space since the last time we chatted, sir?
I mean, you could almost hear the sound of screeching tires as the market stopped moving. Even yesterday with 3M getting absolutely pummeled, we had about an hour and a half of real disassociation between the Dow and the S&P, and then that ended fast. Realized vol on the SPOOs is about 6%. The daily ranges, yesterday's daily range was crazy, and I think it was like 12. Today the daily range is about 9 or 10. Yet the VIX has been perky. So, as we've gotten to these all-time highs, I feel I think people are a little afraid of shoes dropping. We also have earnings. We have a trade deal next week potentially, which could also be a reason that falls high. But now that we've gotten through about 80% of the really big name announcements, we still have Apple and a couple other ones, but Amazon, Microsoft, Intel, Exxon, Chevron, Procter & Gamble, Disney, they've all has Disney reported? Disney is not. JP Morgan, Goldman, all those names have reported. So we're literally waiting on Google, Apple, and Disney, and we have a pretty good view of what earnings season is going to look like. And so I think that VIX is, believe it or not, if people are looking at it in the 12s and saying it's low, I think it's way too high. I think it should be about 11.5. And even that is going to be healthy. But, VVIX is about 84. The spikes, the spikes looks okay. It's like you said, it's been a little disassociation. And that's probably related to the fact that when that SPY tends to have, for some odd reason, tends to have a little steeper skew. So we could be seeing some perkiness in out of the money puts that would be driving the spikes index higher. So that's where that disassociation may be coming from. But on the whole, I just think that it's inexpensive to put on hedges, and vol is high. So I don't know. It's a little weird.
I've always said spikes was the perkiest perhaps of indices out there. But speaking of disassociation, that's something I kind of noticed. Some of our listeners have noticed lately as well. It is kind of, we're in that kind of weird time in the market where the indices kind of seem to be moving a little bit to the beat of their own drummer. You look at small caps and they're doing something, and then you got Dow maybe unched, and you got S&P kind of up, NASDAQ off. It's kind of one of those weird times in the marketplace. Is that something that's kind of really, you mentioned that as well, is that something that's resonating for you? It's a weird, I wouldn't say correlation is falling apart yet or anything like that, but it seems like we are in this weird moment where it kind of depends where you're playing in the space, and whether you're old school economy, new school, small cap, large cap, you're going to have a markedly different experience day to day. Would you agree?
I would indeed.
Well, there you go. We agree. Crazier things have happened. Dogs and cats.
I know it happens.
Dogs and cats living together. Mass hysteria. Let's get to it then, because you can't really talk about the volatility that's going on right now without talking about earnings. That's why we got Mr. Matt there in the MIAX hot seat. He is the keeper of that data. All those great reports you see, the earnings move results reports, all that stuff you guys get access to over there at theoptionsinsider.com. It's all courtesy of Matt and his team. So thank him. Send him an email saying, hit him up on Twitter at OptionRats and say, Matt, thank you for all the great data, because you guys have been asking us for so long for earnings data, earnings straddle data, things like that. And surprisingly, and I've said this for years, it was a dearth of data on that front, even though it's very important information. And so now Matt is filling that gap, and I am happy to see it and happy to bring it to you guys out there because I know you guys love it. So, Matt, let's get to it. It's been a hot week here from an earnings perspective. Tuesday, we saw Twitter and Snap. Wednesday, Facebook, Tesla, Softy, Boeing, our neighbors across the street here, Chipotle, a legion of those around this place. They're neighbors all over the place, not the HQ, though. PayPal, WWE on Wednesday. Spoiler alert, they kind of screwed the pooch there. Yesterday, we had Amazon, we had S-Bucks, we had my old stomping grounds at Intel, Grubhub, Mattel, Barbie blew the doors off. Who knew? So, Matt, there is a lot popping off this week. I'm sure people were hitting you up all week long with questions, comments, what's going on, what's popping off in the world of volatility. So let's start there. Kind of give us like a broad overview. What's really been catching your eye? What's really generating the most interest for you and for your users over there at ORATS as we're back in it, sir, back in the throes of earnings season?
Yeah, a lot going on, and earnings season is very busy over here. We have, I like to look just kind of on an overall basis what's going on now. It looks like the stocks that we cover, they have to be somewhat volatile. Or, they have to have some amount of liquidity, and volatility needs to be in a certain range. There are about 800 total stocks that we follow closely. Like the stock prices have been down about 1%. So you don't really hear that in the news, but most of these stocks are down a little bit. And then as far as the returns that we expect versus what's going on in the market, let me just take a quick look here on that, because the last time I looked, it's pretty flat. So I mean, it's coming in right about expectations. There's a little bit of edge to selling as we normally see, but not as much as usual. Amazon came in, but they were a lot less of a move than was expected. One of the things that we do, Mark, is we look at we take all of the moves for the last few years and we plot them, and if you imagine a plot with negative percentages and positive percentages, I would expect kind of a barbell looking distribution, right? So, maybe down 2 or 3% would have a barbell and up 2 or 3%, and in the middle might be depressed. However, that's not what we see. We actually see a squished normal distribution where it's just a flatter normal distribution, which was odd to me. As a trader, you always remember the big moves, and you don't remember the stocks that don't move that much. So what I've been struck by is a lot of these stocks, if you look at our earn move results and you look at the bottom of those, there's some negative 99%, like they move 1 penny. And so there's a lot that are moving kind of in that middle of the barbell. And, that's one of the bigger shockers of especially this earnings, is that that the shape of that normal distribution does look more like a normal distribution and not as much like the barbell that you might expect. Tesla was interesting, but there's so much going on around Tesla that what was interesting is that after earnings it didn't move as much as we thought, even though it was pretty negative. But the implied volatility stayed high, so I thought that was real interesting. So what you had was a big expectation of movement in Tesla, but a lot of that expectation is carrying over to not just the announcement, but to see what else is going on in the minds of old Elon Musk. So those are the big things that I've seen around earnings, Mark.
Yeah, isn't it fascinating, speaking of Tesla, that now the market has finally stopped believing that guy's garbage. Oh, we're not going to need more capital. 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 We need to raise $2.5 billion.
Yeah. On top of
we're gonna funding secured at for $420. Everyone knew he was making a pot smoking joke, and morons still bought the stock.
Words he probably is going to live to regret. The
that is going to be back below $200 by the time you can snap. You know how expensive, without looking, Mark, and you probably already did. How much do the 2010?
That would be an interesting one, indeed.
How much do the 2020 $10 puts cost?
Did you end up doing your 1x2? Did you end up doing?
You know what? I didn't, but I want to, and I may do it today. How much? They're 20 cents.
I was gonna say they're probably about 25 cents because that seems to be the level that everyone wants to get in on, like that 10 strike is around 25 cents.
And that is, folks, that is how worried creditors to Tesla are about this company. They'll pay 20 cents for a put $220 out of the money. That is how worried they are. This is not a healthy company. They will end up being owned by, let's say, Apple for about $100 less than it's currently trading.
Yeah, we had someone chime in today saying he thinks Google will buy them out if they drop more just to take them over and do their stuff, which is I thought was kind
Google
of
or Apple would be.
Apple has the cash on hand.
Absolutely see that, and Apple could buy them with cash on hand, right? So I could see that. The problem is Tim Cook is not the visionary to, Tim Cook is a operator, not a visionary, and thus Apple is in its box now. It's now Tim Cook is to Apple what Steve Ballmer was to Microsoft.
But he cries when he hugs Oprah, so it's all good there.
I cry when I hug Oprah too.
Yes, that's true. We all cry when we see Oprah here. You mentioned speaking of Tesla, Matt, you kind of mentioned it. That if I had to say a surprise for the earnings of this week from a vol and overall perspective, Tesla's got to be right up there. I mean, how many times have we seen them just dramatically underperform their earnings, and that's pretty much exactly what we saw here this week. I'm trying to pull it up here. I have all the different reports, and for some reason they yanked Tesla. Oh, there it is. Okay. Tesla was on the 24th. Obviously, this is Matt. These are your reports, so feel free to chime in if I misstate your data, sir. But they were pricing in almost 259 going into their straddle, about 258.5 or so. They were looking at about a $20 straddle, 20.05 actually, so decently rich. That was about nearly a 50% implied vol, close to it, and they actually delivered $6.30, so a dramatic underperformance. Again, that's going into the report. That's not counting intraday since then, so if you had it the rest of the week, you've had some other moves going on. Let's see where our friend Mr. Tesla is right now. We're at 234, listeners. So, yeah, it's had some movement since then. So if you picked up that straddle and you held on to it, as Matt mentioned, the vol didn't come in that much, and then on top of it, you had a good move. So you actually worked out, but it looked maybe a little dicey in the early going there. Also, we saw big names popping off here. I mentioned WWE not looking good, getting body slammed themselves here this week. They went into their earnings nearly $100, 98.5. They were pricing in $4.10. They outdid that by more than 2x to the downside, nearly $9 in the actual move. So just getting clipped pretty aggressively coming into today. Let's see if they're getting some of that back. Nope, off another 3.25, nearly 4%, down to 82. So a drubbing. Wow, nearly 20 handles for WWE. Apparently, the market thinking they've topped out. Maybe they've tapped out. for their recent they were one of the best performing names of the year last year, so that's a bit of a fall for grace from grace for those guys. Also, good old Amazon, a name I know a lot of you guys like to watch. They popped off after the bell on the 25th, so yesterday they went into earnings $1,902.25. Say that with a straight face. It's kind of a challenge, listeners. And they were pricing in $73.60. They actually delivered. Maybe this is the narrative of the week, at least for some of the big names, underperforming their straddles, except for WWE. $33.76, so nearly half of what they were pricing in there, which is impressive. Because that's another name we're not used to seeing them under-deliver there. And let's see, today they're up nearly 43 handles, so it's kind of a weird one of their best quarters ever, yet not a great quarter, depending on how you looked at it, but the market liking what they're seeing, up 2.5% there this week. I know we'll have some questions a little bit later, Matt, about we always do. Direction, how you should trade earnings, things like that. So we'll save that for a little bit. But any other takeaways, 10,000 foot? I know we're only like a week or so in, but we've already seen some big names, and we've seen some surprises so far. Any other takeaways on the earnings vol front, Matt, before we keep rolling into the broad volatility space?
Yeah, the biggest mover was a company called VC, Victor Charlie, and they make internal dashboards, and the car sales.
Visteon.
Yeah, the car sales have been so bad that they got crushed. They didn't get near their earnings. But then on the other side of the page, Ford's up 10% today after earnings. So that I thought that was pretty strange.
Yeah, well, and 3M was an utter dump spill. I mean, I can't remember the last time 3M moved from 218 to 190. When was the last time you heard of 3M making a $30 move, a 15% move?
Not exactly a name known for such things. A little more staid.
I don't know. Maybe I'm wrong, Matt. But was 3M's move yesterday kind of especially bad, especially pronounced on earnings?
Oh yeah, 3M. You don't see that in 3M.
Mark, does this make you reconsider wishing you had some single name vol you could sling in that volatility fund of yours, sir?
Yes, I do. Well, 3M, the reason why it tanked is because they dropped Minnesota Mining and Manufacturing, and 3M now stands for Mark, Matt, and Mark.
I was going to say
nice.
I was going to say 3 marks, but you went the other way. I can see how you go on that. Maybe a mullet, a Matt, a mullet, and a Mark.
Well, we got to get if we got Matt, Mike, and Mark, then it'd be 4M, and that'd be
infinitely better. Everyone knows 4 is better. 4 is better than 3.
We need to get another guy named Mark on one of these shows.
Yes,
so it can be
there's not enough of those.
3 Marks to tears.
Not enough of those here. As we continue our search for marks out there who play in the volatility space, let's look back at the broad vol space. You mentioned the VIX, all things. The futures coming in, kind of interesting one to watch as well today. Coming into showtime, we saw, remember, it's a bit of a different beast. It's not quite apples to apples when we were comparing it front month and 2 months out to where it was 2 shows ago, because obviously that April future has gone off the books. We've seen the futures kind of roll forward a little bit. So when we're talking front month, we're talking a little bit farther out now. So we're talking the front month future is about a little over 1.5, a 1.65 point premium to the cash. That's about a full handle higher than where it was 2 weeks ago. But then again, a different future, so a bit of a different beast. Same thing with 2 months out, where you're talking a little bit longer term. That's always almost a 3-point premium to the cash. That's almost double what it was last show as well. Again, different beast, bit of a different animal out there. Mark, anything catching your eye that's wonky weirdness in the VIX futures term structure these days, sir? Oh, he's got the same muting disease that you do, Mr.
It has continued to be extremely flat, but seems to be kind of starting to steepen out a little bit today. I've been just kind of surprised at, the way cash has been able to hold itself up. I mean, we're now, expiration is about a month away. We're about 1.5 points. That's normal. But where things are really flat is in the back end of the curve. July, August, September are all right on top of each other. The back end probably needs to go up a little bit, and the front end probably needs to drop a little bit. So I've been, that spread between like May and June is really wide. And so, yeah, I think that the term structure is still a little wonky and set up where a short VXX, long VXZ trade, so long the intermediate, short the near dated could produce some alpha.
Yeah, right now, May, June, about 1 1/4 handles between the two. So you're at a pretty wide gulf between those two contracts out there. Perhaps some opportunity. Also, some opportunities out there in the options. Let's start in Spikes land. A lot of the OI rolled off with expiration, as we talked with the Spikes guys before. I think they think a lot of people are waiting for the futures. I think that is indeed the case. The big OI still, it was the vertical call roll of 2025, or I should say vertical, that got rolled a few weeks ago, so keeping that position alive. Mr. Meatball, I heard through the grapevine, a little birdie told me you had your own dalliance with Spike's options last week, sir. What were you up to out there?
Me, I was just playing around. I bought a small batch of Spike's puts so that I could walk them through. I bought a little bit of the 14 puts because I wanted to kind of carry him into expiration, and I paid 90 cents with the spike around 13 at the time. And lo and behold, spike settled 11.67. So go me. My first soiree into spike options proved profitable.
There you go. See, you make some money. They give you the first one for free, and then you dive back in and get more excited.
Yeah, exactly.
That's how it always works out, right? The first one's free, and then it works out pretty well. But you're right. I've been meaning to kind of delve in there myself. It's kind of been busy times planning for the wave of events that are coming up over the course of the next week and change. There's like 3 big events coming up. So we're planning for those, listeners. Stay tuned for that, by the way. A lot of great stuff going to be hitting the network soon. Going to be chatting with a lot of fun folks here for courtesy of the OIC conference and some other events. Going to get our old buddy Mr. Petterfee from IB back on. It's always fun to chat with him. A lot of fun stuff coming. But that's coming down in the next week or so. In the meantime, let's keep on rolling. Speaking of rolling, let's see what's rolling, what's hitting, lighting things up in the world of VIX options. A pretty light day today, as you mentioned. A little bit north of $1.50 on the tape, and 250,000, of course, coming into showtime. The ADV also fairly light. When it gets below 500,000, you know things are kind of quiet in the vol space, and that's pretty much where we are now. 459,000, that's very low. Usually, you like to see VIX ADV north of 600,000, maybe 650 or so to really be in a healthy kind of robust range. We're almost 200,000 below that. So things not exactly lighting it up. Maybe we're getting a little bit early season. Of course, we're coming up on May. The summer movies are coming out. It is a volatility endgame after all. So perhaps I won't say the old adage, but perhaps some of that is kicking in here as well. In terms of what's dominating the tape out there, in VIX options land, let's start from the bottom. I will say this, Mr. Meatball. I wonder, tell me if this attracts your interest, if it piques your curiosity, because it piqued mine. We obviously break down the top 10 VIX options positions every week. Guess how many puts there are in the top 10 this week?
I'm going to go 4.
See, that would be a good guess. That's a safe, healthy bet for a normal week. 0.
Oh.
None. All calls. That caught my. If you want an indicator, perhaps there is one.
Upside is cheap. Upside is really cheap, but that's if you want to know what's holding up VIX, that type of action is what's doing it.
Yeah, clearly folks are not afraid. A little bit upside. Maybe they're selling a little bit of it too. We'll get to that in a bit. Let's start the number 10 here. The May 26s, $1.22 on the tape. Number 9. The June 23s. Here again, it's going to be all calls all the time, listeners. $1.37 on the tape. Number 8. June 37 halves, $1.40. Number 7, the comparatively reasonable May 18s with $1.53. Number 6, May 37 halves. That's always an interesting strike there, 37 half. $1.86 on the tape. Number 5, the May 23s, 194,000. Number 4, the May 22s, 197,000. Number 3, the May 20s, 233,000. Number dose here, the May 27s, 463,000. And the number 1 spot with the bullet, the May 25s, yet again, 500, almost 550,000 of those. So that's more than an entire day's ADV just in that one strike and option, listener. So a lot there. Even though the total OI kind of light as well, shy of 7.5 million. It's about 6.2 million on the calls and about 1.2 million on the puts. So yeah, not a lot open. Let's see what's printing. The big print today coming into showtime was, again, surprise, surprise, upside. May 19, so a little bit lower on the upside ranks, not exactly 37 halves or anything. Going up 21, almost 22,000 times for 65 cents. So kind of nearer to the bid. So maybe there is some harvesting going on out there. Some people. That was opening though, so it wasn't like they were closing out some calls that had perhaps not fared as well as they hoped. But either way, opening nearly 22,000 on the May 19s, kind of maybe dumping today. Yesterday. A couple of big prints going up yesterday. That was kind of the big day of the week was yesterday. We saw the May 23s going up for 35 cents, lifting the offer 30,000 times. So people liking to get themselves some upside yesterday. And then also we saw a roll for about 100,000 contracts. It looks like the May 50 OC 40 roll going up effectively 50,000 times, so 100,000 total. We saw the Mays going up for 7 cents, and the OC 40 is going up for 41 cents. It looks like someone rolling out and down, which is kind of interesting, maybe a little bit of a commentary on where we are in the vol space right now, not keeping that 50 strike alive. Why bother? Go down to 40, take advantage of the sell-off. But still wanting their upside, just making it a little bit close to the fire. Can't really blame them. if you had to choose 50 or 40 right now, I'm sure most of you would probably choose the latter there as well. So that's one of the big trades of the week. Wednesday, we saw the big print where the May 18s going up 27,000 times for 46 cents right off the bid. So a little bit of upside harvesting. So market seems kind of interesting. There's a lot of upside open out there right now, and it's dominating the tape, but not all of it is this frenzy of buying, even though there clearly is a lot of that. There's the roll and things, but also a little bit of harvesting. What are you seeing out there this week in the VIX options, sir?
Yeah, we've definitely seen, some pretty heavy upside trading. Biggest trade that I saw go up in the tape was July 22.30 1x2. Rumor was that was against some sort of variance trade. We've seen a lot of like risk reversal calling, risk reversal trading. The June 12-15 put spread versus the 24 call has gone up a few times. Interestingly, some way out of the money stuff traded. We saw a June 12 put bought this morning for a dime, 10,000 times. I like that trade a lot. Also,
I'm sorry, say that one again. What was that one for a dime?
The June 12 puts, they bought 10,000 for a dime this morning.
Interesting.
I like that. I do. I think that's an inexpensive play.
June 12 puts or Tesla 5 puts? What do you want for a dime?
May 12 puts are a dime. I think that those make some sense. The other one I kind of like, somebody did the 15-12 half put spread for $1. That is a really nice play if you just think VIX isn't going to get over 14 but for the next couple of months, which I think is, or at least stay over 14, which I think is a relatively safe bet. I really like that construct. And, we've definitely seen, upside is still inexpensive today, Mark. So remember a few weeks back, I was talking about that May 1x2 that I put on. I did the May 1721 1x2, and I collected 2 cents.
Oh, yeah, our listeners wanted weekly updates on that. So
yes, well, I took it off, and I paid, guess, I had to buy it back. Guess how much I bought it back for?
7 cents.
2 cents.
2 cents.
So I made absolutely nothing on that, except for that allowed me to be short a bunch of vol somewhere else that I made a bunch of money on. So it ended up being a great trade. And then I constructed a very similar trade. I did the 1621 1x2, and this time I collected a dime. So I will tell you guys what and that is, again, allowing me to short some extra vol somewhere else. But I will keep you guys in the loop on my amazing backspreading.
Amazing backspreading. News at 11. But you're right. We talk about that a lot here on the show, but clearly we only look at the option side of it, and there are usually other components that can work pretty well. A lot of these backspreads are going up against aggressive short positions out there. So if it allows them to short and it works out well, then if the option spread isn't ideal, it doesn't move against them, or it moves against them a little bit, not the end of the world, obviously. So interesting stuff. I forgot which listener it was who wanted all those updates on your backspread, but there you go. I know a lot of our listeners like that trade, so they'll be staying tuned for that. Meanwhile, stay tuned for our old friend, formerly known as VXXB. By the way, Matt, did you hear the might of volatility views has been felt far and wide, because we were disgruntled here with the ticker symbol VXXB. We thought it was a terrible name, and we said they should go back to VXX. Barclays clearly listened to us, and they bowed to the power of us and our audience, and have now rechristened it, or are about to, VXX. So does that make you feel better, Matt, that just the power of the show you're on right now?
It does, except for, data people like me. We have to go in and change a bunch of stuff. So
you're right. I forgot. You guys are the hidden victims of all this. I do apologize. But, a bad brand is a bad brand. We can't just let it sit, sir. We can't. We can't sit idly by while such horrors are visited upon the trading populace. All right. Let's look here what's going on in VXX. It shall no longer be called VXXB. Merely VXX land, even though, spoiler alert, listeners, if you want to get a quote for it, you still have to type in VXXB. Unfortunately, you didn't hear that from me, though. About 25, not even a half, 25.3 has kind of been at that level for most of the afternoon here. So about 1.3 points lower than last show. So pretty a decent little chunk of erosion. I know a lot of you like to play that trade, and it has been eroding of late, even though I'm looking at the open interest. Perhaps not as many of you on that tip as there used to be. Not quite as call heavy as VIX is right now, but still let's say calls are leading the dance here. Let's go down to number 10. We got the May 28th, 22,000 of those open. Number 9, the June 21 puts, 22, almost 23,000. Followed by number 8, the June 24 puts with about exactly 23,000. Number 7, the June 40 calls, 23, almost 24,000. Number 6, the May 40s, about 27,000 of those open. Then back to the puts, the Jan 14 puts. Interesting. I like Jan 14 puts, nearly 30,000 of those bad boys. I'm going to go get a quote on those, see where those are trading. Now, those kind of intrigue me. The VX, what we got? June 80s. Once again, the June 80s. 30,000 of those bad boys open right now, followed closely by the May 38s, also 30,000, 30,200 to be precise, of those taking the number 3 spot. Number 2, the final put on our list, the May 23s, 31,000 of those bad boys. Number 1, May 69 calls, nearly 34,000 of those bad boys. So still calls. So Mr. Meatball, we got all calls in VIX and predominantly calls in VXX. Does that surprise you at all, sir?
It does not surprise me. Again, you have lots of hedging, lots of, stuff like that. But I have seen some pretty decent trades go up in VXXB in the last few days. There was a big.
I'm sorry, what ticker was that? I don't recognize that ticker. What ticker?
VXX.
There you go.
It doesn't change until March 2nd.
I know, but still.
Or May 2nd.
We have to embrace our power here or no one will.
I like this. A customer did the Jan 2021 1580 risk reversal tied to 2515, which was kind of an interesting one that went up a while back.
1580? I'm assuming they bought the put, sold it. That seems opposite, though, to what we're seeing going up a lot there. People like the upside.
I don't know, but just a ton of volume today. Pretty heavy volume on the May 24 puts, and some decent volume on kind of way out of the money stuff. The May 24 puts, they've already done 10,000. A decent 1x2 put spread. You got the June 7th. They did the 24.5, 23 1x2 put spread. I'm guessing they bought 1 and sold 2. Just my guess. Looks like the 23-21 put spread went up some, and that's been the bulk of it. Most of the upside trading has been really near dated. Other than we had the June 34-46 call spread, looks like it went up, and other than that, it's been all May, and then go away.
Now, think about that risk reversal. I get kind of depends on the ratio you do the underlying with, I think, of how much I like it or not. Because 15-18, you could lean that a couple of different ways. If you do it 1-to-1 with the underlying, you do it delta neutral. I think I want to be biased a little more to the underlying on that side, just because I'm not. Yeah, that's a weird one. 15-18. You gotta
aggressively hedge that.
Yeah, you would have to very aggressively hedge that, because straight up, I wouldn't want to be. I mean, I want to lean short, but I wouldn't want to be short the 18s here and just have that. I don't know. So that's a weird one here. I'll have to mull that one over. Kind of like it though. Just theoretically, but let us know what you think about risk reversals out there in VXX, listeners. The big trade today looks like it's a vertical. The June 34-46 vertical. Spoiler alert, paper buying it 4,067 times. Looks like they did it for 47 cents here. You like that one? 34-46, listeners? You like that 15-18 better? Again, depends on how much VXX they did against it. And other interesting things. You guys like to sling your VXX mostly to the dark side, but apparently the rest of the market is leaning to the light side VXX these days, which is kind of intriguing. Speaking of intriguing, let's hope your voicemail is intriguing as we get to it. A little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, before we get rolling here, we talked a lot about Tesla volatility at the start of the show here. We are still in the throes of earnings season, so we had a question for you. We've talked about them before many times. Mark just talked about them on this show. 25 cents, 20 cents for the Tesla Jan 10 puts out there. Let that sink into your brain for a little bit, listeners. But a lot of the OI, most of the OI in Tesla options is dominated overwhelmingly. At least all the top 5 and the lion's share of the top 10 are pretty much far out of the money puts. A lot of them in Jan, all of them pretty much at the 100 strike or below, which gets us to the very simple question. A lot of money being put on the sidelines just in case, or maybe hoping, that Tesla heads south of 100 by Jan expiration. Do you think that will come to pass? Yes or no? Very simple question. Matt, we shall start with you, sir, as the keeper of all of our data. No cheating, no crunching any numbers, sir. You got to use your gut on this one. What is your guess? And more importantly, what do you think our audience is saying, yes or no?
I don't know, but I've been bearish in Tesla for a long time, Mark. So I helped write an article in the Wall Street Journal when he did that famous tweet, and was he believed or not? So I think fewer people are believing him. So I say not, Mark.
You say no, as in yes, it will be below 100 by Jan?
Yeah, as in yes.
Okay, so you're going the yes way. Interesting. Mr. Meatball, what are you thinking? Yes, or is that a bridge to? You said below 200 before. That isn't as far as it was. That's only 30 odd handles now. What about below 100 by Jan, sir?
I mean, it's lost. If you look at Tesla, let's see, when was it the high? On December 14th, the all-time high is August of about 380.
Yeah, Mr. Musk's infamous tweet.
Yeah, the near-dated high is also about 380 in December. So in just about 4.5 months, it gave away $150. I don't think it. Would I say it's likely? No. Is it possible? I'm going to say yeah. I think it's. Here's what I'll say. It is a lot more stinking possible than people think it is, and that's why people think twice about doing those 1x2s, because it actually could be below $5. So I'm gonna, just because I hate Tesla drivers, even though some of my close friends have Teslas, I love them until they get in their Tesla, and then I'm like. Tesla owners.
I will say, have you ever tried to go buy a Model S downtown? It is the widest car. It's like 1.5 car widths. Super wide.
Fast. And you know what? They don't use gasoline, but they run straight off of smuggery.
They're
the smuggest drivers.
Wasn't that an episode of The Simpsons way back when they had a guy who
I believe it was.
It was Ed Begley
South
Jr.
Park.
He drove a car powered by his own sense of self-satisfaction.
Yeah, I think that was South Park, but
one or the other. I don't know.
But Prius drivers, yes, but all the smug in the area in the air. But yeah, they are powered by smug, and so for that reason alone, I say sure, why not? Let's take it down to $80.
You say yes. We got 2 votes here for yes. Our audience is still leaning no. 2/3 of it, roughly about 64% saying no. 36% saying yes. 2 days left, listeners. Tesla lovers, or I should say Tesla haters, really, because yes is obviously to the downside in our poll. A little bit of inverse psychology for you. If you listen to this show, you can wrap your heads around it. So get out there if you think it's going to get under. Tesla Defense Force seems to be saving them right now. Living in spite. In opposition to what the options open interest is saying. Vivic 3 wants to know, now that Spikes is live, what is the status of the other Vol newcomers that have appeared on your show, like Voldex and Volx? I was just talking to the Volx boys down at FIA Boca a few weeks ago, about a month ago. They got many iterations. They have real day options. They have a bunch of cool stuff in the offing. They have a couple of things that are holding them back. One is OCC does seem to be a bit hesitant to create a pricing model, a risk model for it that they're comfortable with. So they keep kind of saying they have to push it back down the road a little bit. And they've been saying that for quite a while now, several years, which is unfortunate, I think, to say the least. They should get their act together in that sense so they could actually be able to list these things so we can actually see them in the marketplace. That would be interesting. So that's the thing that's holding back Volx. Also, they're looking for a future to list with it, so in which case they have to kind of either list with an existing futures exchange or create their own. They're actually leaning the latter. You'd be surprised. So that's a heavy lift, but they want to go that route. So interesting stuff on the horizon for them. Hopefully we'll see one of those products listed sometime soon, and we could actually sink our teeth into it here on the show. Voldex, that is the SKUDEX Voldex stuff. That's in the dominion of NASDAQ right now. When I talked to those folks about a year ago, they were champing at the bit. They made it sound like it was going to come out sometime very soon. We have not seen it, spoiler alert, for a year, so I'm hoping to catch up with those NASDAQ folks next week, actually. And maybe I'll pick their brains about that exact topic and see exactly how that's going. So maybe I'll get a little bit of an update for you guys there. All right. Let's see here. Benson H wants to know, is there a clear winner? We always get this question, Matt. It's like whenever you're on, whenever you're talking, whenever we're doing earnings stuff, this question in some variation pops up. This time it's from Benson H. He wants to know, is there any clear winner for earnings season right now for a volatility trader? Is it short vol or long vol that's winning the day right now? Even though we told people many times, don't. There's no clear bias. They still want to know, Matt. So I guess right now we're in the early blush of it. Is there anything in this early limited sample set that is leading the way, sir?
Actually, what I would say in this sample set is, on an overall, stocks are pretty close to what's been implied, but there's been some bigger movers. I would say if you could bet on it on a couple and make a lot, and not take too much risk. Moving just in that what I was talking about, I've seen more than normal stocks move very, very little. So the distribution, if you could figure out the distribution, that's the only thing I would say that I've seen that's different this time than last time. I know it's kind of a difficult answer there, but that's the only thing different I'm seeing this time.
So yeah, no clear bias, just a little bit of change to the distribution. Here's a related question, Matt. Another person who wants to dive into earnings trading. We talked about different ways, net short, net long premium. Haven't really discussed this approach to an extent. This comes from Ross Teal. He wants to know, what about calendar spreads during earnings where you're long 2 months out, short the month of the announcement? Does the long leg mitigate some of the risk of being short premium going into earnings, or am I deluding myself? So here's a listener, obviously, who's listened to some of our earlier shows, said we've advocated against taking direct positions through the event itself for a variety of reasons. The data doesn't really support it. So a lot of other reasons. It's a risk you can't really control. Many factors, trading before it, trading after it, makes a lot of sense. During it, not so much. But that said, Mr. Matt, I don't know. I'm kind of throwing this at you out of the left field here, so you haven't had a chance to back test this, obviously. But I'm curious if you have anything to add here for Mr. Ross, who wants to trade some calendar spreads. Again, he's still got that short leg in the front month, though, which could come back to bite you. And any thoughts on this one, sir?
Yeah, I kind of like the thinking. And what I would say is our backtester actually can backtest that fairly readily. And what I would add to that is I would look for one other piece just to add to that, something like, the relationship between the front month and the second month. And I think you might be able to find something. So Ross Steele, give me a buzz at matt@orats.com, and we could talk about how to set up that backtest and maybe find some data to support a trade like that.
There you go, Matt. Hit him up, or hit him up at Option Rats on Twitter as well, and maybe you can get that set up so you can see for yourself exactly how it performs. I don't know, Mr. Meatball, does that one resonate with you? A nice little long calendar spread into earnings where you're long a month out and you're short the announcement itself?
Nothing in earnings resonates with me.
I had a feeling
I
you were going to say
don't
that.
trade them if I can avoid it. I'll if I can find something really, really cheap that I can make a buck off, I'll do that. So, like, for instance, ahead of Facebook, we looked at, like, the 190, 95, 200 bull call fly for about 60 cents. That was a huge winner. About the only earnings play I have on right now is a little out-of-the-money butterfly in AMD. But I do not really play earnings because it's such a ridiculous crapshoot.
Our audience, they can't get enough of it. They all want to sling themselves some earnings.
I know. It's unbelievable.
It is interesting stuff. Speaking of interesting, let's see how interesting our prognostications were and how interesting they might be. It is time to get into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the Crystal Ball, the portion of the show where we embarrass ourselves for your amusement and hopefully edification. We attempt to wrestle the slippery pig that is VIX Cash, and indeed spikes now as well, which makes it doubly fun. Mr. Meatball, obviously we didn't have a show 2 weeks ago, So there's many different ways we could parse this. And also the markets were closed last Friday, so we prognosticated. I didn't remember on the show that we were closed. That would have changed how we predicted, but we did not. So we prognosticated for a day where the market was not open. So we can look at it a couple of ways. VIX Cash closed on the 18th at 12:09. I was at 12:75. You were at 12:37. So in that case, that would make you the winner. But of course, it opened that day at 12:80, which makes me almost exactly a bullseye. So I'm inclined to go that way. Which way do you like to go, sir?
I don't care. I don't care. All I know is that we just say we both won. How about that? How about
this? Everybody wins.
Make it it'll be a participation trophy.
I like that. We get a nice trophy.
Everybody gets a trophy. Everybody gets a medal. Everybody gets a ribbon because everybody did great.
And then we let Matt go first. How about that? Because he wins the dubious pride of place. Matt, all of that a long way around to saying you get pride of place, sir. What are you feeling? Not just for VIX Cash next week, but for spikes. Even though they're usually within a half a handle or so. So your prediction for one should be pretty close for the other.
I'm feeling down a little bit. That's all. That's as specific as I could get.
He's feeling down. As long as it's just the VIX and not you internally. If you feel down, Mark and I'll fly to New Hampshire and we'll give you a big old hug. I'll have Andrew drive in from Maine, and then you can feel like you live in an urban place relative to him.
I won't have to. We'll see him in Miami in a week, so we could cheer him up in person down there. If you're sad in Miami, you're doing it wrong.
Yeah, that is true.
So I'm gonna go listen to Super Dave.
Nice.
So Matt, you're since you said down, I'm gonna put you down for about 8.25. Does that sound good?
Sounds good.
See, there we go. All right, Mr. Meatball, you did technically come closer to the closing, so I will let you go next. What are you feeling? Don't say 12.37.
I won't say 12.37. I'll say 12.36.
I'll say 12.36. I knew exactly where you're going to go. The second I said that, I knew exactly how you're going to go. The blind squirrel findeth a nut once in a while, listeners. Isn't that the old saying? All right, so here we are coming into the end of showtime. We got spikes at about 13.15. We've got a VIX Cash. Where did my VIX go? There we go. About 12.75. So most of them kind of hanging where they were at the beginning of the show. And you know what? I was at 12.75 for last week. We're at 12.75 right now. And I gave Mr. Meatball a hard time, but I'm not hating that number right now either. I can see what Matt's thinking about downside, and that could certainly come to pass. Mark's comments earlier about the fact that we're not really meriting even a 13 VIX, let alone a 12 or so. That certainly has some resonance. So I could see it if we're in a 12 or even an 11 handle. It wouldn't blow my mind, but I don't know. I'm not feeling the aggressive downside yet. So I mocked Mr. Meatball. And then I promptly keep my same pick, which is something I never do, listeners. So I guess ballyhoo for me. Oh, that music, unfortunately, listeners, means we've come to the end of the Endgame, if you will. But before we go, let's go back around the horn. Let's start with our guest, Matt. Matt, I know you're rushing off after as soon as this show is done to go see Avengers Endgame, so I won't hold you up any longer. But we will be seeing you in a couple of days in Miami, so that will be fun. You and I in the same room is always fun. But before we get there, sir, people like Ross or others want to check out your back tests or what else you got cooking over there in the land of Orats. Where should they go? What should they do, sir?
Yeah, it's been a big week. We released a big upgrade and gotten some very good response. Go to orats.com. Check out the blogs at blog.orats.com. Twitter as well. And come see us at the advisors option once in a while, Mark.
Yeah, the other fun show you do on my network, which we're going to be doing a little truncated this time. We're going to be doing it from the Swan event in a couple of days, and then also with you in Miami. So it'll be all sorts of fun. My audio guys will love it. We'll have a two-part kind of cut-together show, which will be interesting. And Mr. Meatball, I won't be seeing you in Miami, unfortunately, but you got a lot of stuff cooking, and people, if they want to come see you in Chicago pretty soon, which is scary. June's almost upon us, which is nuts. But where should they go? What should they do, sir?
Yeah, we got a lot of things going on here at Option Pit. Our June event, you get to hang out with me, get to hang out with Mark, get to hang out with Mike Tusa, Andrew. The Thompson boys are going to be there. It's going to be just one heck of a vol event. Go to optionpit.com. It's right on the front page to sign up. We have a big announcement involving VIX and spikes trading that's going to be coming up in the next couple of weeks. And I'm doing a free webinar next Thursday. You can go to optionpit.com/stock trading to sign up. But more importantly, come and visit me in Chicago. Can't wait to see you.
Check it out. I'll be there. Maybe we'll twist Matt's arm to be there. Who knows? You never know who's going to be there. You know, a free steak from the meatball, that brings people from far and wide, hither and yon. So check it out, optionpit.com, to learn more. I mentioned we got some good stuff coming for you, so stay tuned for that. A lot of great guests. If you can think of them, if they're interesting names in the world of options, chances are we're going to be talking to them in the next couple of weeks. So a lot of great chats coming at you, a lot of great programs and episodes coming at you on the network. So stay tuned for that. This is one of our busy seasons, so I'm going to be doing a lot of talking over the next couple of weeks. So hopefully the voice holds up. I find a cigar or two at OIC really tends to keep the timbre over there, which is nice. And on behalf of Matt and the meatball and indeed myself, and even my boy Luigi there listening live, I just love that handle. It brings a smile to my face. I want to thank all of you out there for downloading, streaming, and subscribing, for listening live. All the fun stuff that you do, keep it coming, and we'll see you back here next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.